My good friend Crypto Wizard is also with us. He's a Glassnode analyst, and he's been reminding us that we need to talk about the bear case as well. In the beginning, right before the call starts, I was talking to Ryan, to Jeff, and saying, hey, I was trying to like bring a balanced set of questions, like 10 bullish, 10 bearish. But then like, as I studied more, like I just got rid of them, right? It just doesn't make sense. But we need to think about that as well, right? Actually, we need to knock out, or at least think about, the possibilities of this trade going wrong, all sorts of the risks that might be present. As a Bitcoiner, I'm very skeptical of any kind of centralization, right? We have Michael Saylor, any huge influential person is positive, but also, part of me also thinks there is some kind of risk there. Then everything that might go wrong with the leverage they're taking, or what are the assumptions? Essentially, what are the assumptions that we are taking here in all the analysis that we've said that might not pan out?
Yeah, I mean, if you go look at the 10K, the MicroStrategy 10K, it outlines every possible risk, and it's going as crazy as into trying to rationalize black swans, and there's tons of detail in there. So if you're really concerned, you can go look at the MicroStrategy 10K, and that will give you some perspective. A few big ones that come to my mind are unrealized capital gains tax. If for whatever reason politically we got into a situation where everybody thought it was a good idea to do unrealized capital gains tax, I mean, that would be a nightmare for all capital markets, not just MicroStrategy or Bitcoin holders. It would likely destroy value in the capital markets. So when you think about the downsides, it's helpful to think about the game theory of many of these situations and where the incentives lie for all parties in each one of the potential downsides. Unrealized capital gains, that's one of those that it could happen. The likelihood and probability is incredibly low. I think that's probably even black swan. You've got custody risk, right? You've got third-party custody risk. I know MicroStrategy has their Bitcoin in custody with a few custodians, that being Coinbase, Fidelity, and I think a couple others. Where this can get where the risk of custody can be reduced is thinking about SAB 121, which was a bipartisan bill that was passed recently in this last year, and then vetoed by President Biden, which allowed banks to custody Bitcoin. If banks are allowed to custody Bitcoin, then the custody risk starts to get spread out across many different institutional players as well. And if you start to think about custodying your Bitcoin with a company like Chase Bank, JP Morgan Chase, you are now plugged into a systemically large, too big to fail financial institution, which changes the dynamics of that risk vector as well. So, I mean, you can get as crazy as into like global EMP, right? If there's a global EMP for whatever reason, we've got bigger issues. You better have enough guns and fresh water to protect yourself. And probably we're not worried about our Bitcoin anymore. Even then, in that situation, you have satellites in space that have the Bitcoin ledger thanks to Blockstream. So we even have backup nodes from that perspective as well. So, I mean, it's helpful to think about the risks, not being able to service the debt at some point in the future. But as you can go look at their financials, right? They've got 4 times as many assets as they do debt. So they're under leveraged in my opinion. It's equivalent to taking out a 25% loan on your house as opposed to like an 80 or 90% loan. So they're under leveraged from a financial perspective compared to like FTX. FTX had $10 billion of liabilities and $9 billion of assets. They were underwater. They were bankrupt. So it's helpful to kind of monitor financial leverage. I think that's helpful. They're operating within a confident framework.